Hi, this is Zach Meir with a weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 11th of February. Starting off with the FTSE 100, which has done exactly what we didn't want it to do, which is rally a bit and then fail back below the 50 and rest on the 200-day moving average. The 200-day line, the low of the day roughly on Friday, around 75.50, and end of day close below that, and then we're heading down towards the floor of that rising August trend channel. It's even worse than that in the sense that bonfire night, or the early part of November to Valentine's Day, is actually the strongest part of the FTSE cycle on an annual basis, at least over the last 20-25 years. So the fact that we are dipping after a rather feeble rally from November is not great. Obviously, it's been much better in the US, and that's where the November to February rule has really worked this year. But as I said, below 75.50, the 74.40 or 30 area at the floor of that channel beckons by the end of this month. This stage, early and end of day close, at least back above the 50-day line in 7600, delaying the potential breakdown. Moving on to the DAX, and here we had decent attempts at trying to break through 17,000, multiple attempts in fact. We've got support there around the 50-day line on the floor of that October trend channel at 16,700, so ideally would stay above that particular area. If we can, then we're still on track for a potential best case scenario move up towards 17,900 on the floor of that rising October trend channel. RSI still above neutral 50 at 57, so that does help the situation at the moment. Moving on to the Dow, and here you can see that we are still up at the dizzy heights above 38,000, which is particularly good. The pattern here is of a rising trend channel there from the latter part of October, heading for 40,000, which I suppose now is an end of March target. If we break back below the floor of the channel there, 38,200, then there's the risk of a move to the 50-day line, 37,500, but we're not expecting worse than that, even though we see bullish divergence coming in there in the RSI window. Moving on to Bitcoin, which has been apparently anticipating the halving at the end of April in quite a good way. We're just shy of the best levels of last month, and we were looking for the top of that August trend channel at 52,000 now to be hit by the end of next month. It now looks as though we'll hit that by the end of this month, especially while we're above the recent neckline resistance break around 44,000, so above 44, looking for now up to 53 by the end of next month, and maybe 5,000 plus obviously by the end of this month, but going very well indeed. Moving on to gold, and here, which was, I suppose, gold was the old Bitcoin, not doing so well at the moment. At least we are above 2,000. The situation here is that we've got the 50-day line there at 2,043. Below that risk, a move to the floor of that rising March 2023 channel, and the 200-day line around the 1,983 level. But at the moment, just hoping that we will remain above or in the vicinity of the 50-day line, and then have a potential move to 2,100 recent December resistance by the end of this month. Moving on to the small caps, and starting off with Artemis, which managed to do, well, I suppose just what we wanted it to do, break to the other side of the falling trend channel there from September. But we hit that target there around 1.5 pence on Friday. And the view now is that a break of 1.55 and that line from September on an end-of-day close basis could take us up to a new target as high as 2.3 pence by the end of next month. Ideally, we stay on the right side of the 50 and 200-day moving averages at 1.1 pence. Even better if we stayed above the December resistance at 1.3 pence. Moving on to Andrada, which still continues to be extremely frustrating, even though we've had a couple of attempts at bouncing off the sub 4 pence area. The initial target here, while we're above 4, up to 5 pence, but has to be said that given the fundamental strength of the company, you can see that it hasn't so far managed to get the message out in terms of the share price, which is a little bit disappointing. Moving on to another stock where you sort of think the shares are too low. Acuity here, an attempt at bouncing off the lows, in this case again at below 4 pence. Want to see the shares break that June resistance line there at 4.25 and then go back up to as high as 5.9 or 6 pence by the end of next month. But given the recent news flow, it looks as though the shares are rather low given the merits on the fundamental basis. On to Beeks, and here I've got a situation where we had an initial target 127, and the best case was at 144, which has obviously been broken, and that leaves us looking for a new potential target, which is perhaps as high as that purple line there, 190 by the end of next month. That's a resistance line projection from back in early 2022. Upside valid while we're on the right side of £1.40. Moving on to Celadon, where again another company which hasn't perhaps got its message out as well as it could have, but that may not matter now. It looks as though we've taken up all the stock there's been to take up below £1, and at least while we're above that 50-day moving average at 101. Looking for a breakout, potentially as high as £2.10 by the end of next month at the top of that broadening triangle from April last year. You can see that actually looking at last year, March, April seems to be a good time of the year for the company, and maybe that will be repeated this time. Moving on to a stock which has given us one of the more interesting both technical and charting setups. Bear trap gap reversal for eco buildings, which as regular viewers of the Bulletin Board Heroes will know that the bear trap gap reversal is one of our favourite signals, rather largely because it tends to be the most reliable. Plus we had a premium placing and the shares have stayed above the placing price, so it's a fundamental and a technical signal there. Looking for 15-16 pence here perhaps as soon as the end of this month, maybe up to the upper teens by the end of next month. On to first class, and here we're hoping that finally the whoever's selling the stock will be out and has gone for good and allow the shares to finally go up again. The fundamentals in terms of the news flow have been very positive, so hopefully that will kick in. View now is that above the old January support there, just under 4 pence, we're looking for a return to at least the 6 pence area by the end of this month, especially after the turnaround at the end of last week. Fulcrum is next, and here shares sideways shuffle above the rising 50-day moving average, and also we're above the 200-day line, the black line there, all around 15.8 pence. The longer we remain above 15.8, the greater the chance of a move up towards the top of that rising trend channel from the early part of last year as high as 18.5 pence, hopefully by the end of next month or even sooner. One of the big rises that I don't think anybody else really covers is Filtronic. Well, certainly don't cover it on a technical basis. Here we've got this wide rising trend channel from the early part of 2022. Top of that channel currently heading for 46 pence. And we're looking for that at least while we remain above half of Friday's range, say the 35 pence area. Nice, a couple of gaps higher so far this month already, and gaps higher back in December and January. So a massive re-rate happening here, and it's good to see that the market's finally admitting it was wrong on that low valuation of the company. Moving on to Katoro, where we had a 1.14 target previously. That was hit last month, but the shares obviously had to regroup, but a lovely end of week close and an end of day close for the shares above a sharply rising moving average on Friday. That suggested above 0.14. We're going to head for a new leg higher at that late 2022 resistance line projection at 0.22, hopefully as soon as the end of next month or even sooner. On to a requested stock by an esteemed follower, Quantum Blockchain. Here we've broken out of that falling wedge, which has been in place since October. The level there in question around 105. Above a 105, we're looking for about 1.8 or 1.9 pence, which is basically retesting January resistance, or just about taking it out. So let's see if QBT comes up with the goods. Synergia is one where we've got everybody waiting on the edge of their seats, but the shares have managed to rise in the meantime anyway. We had an initial target there around 0.15, 0.16, and the next target there 0.22. which hopefully we'll see by the end of this month. The other point to note is the way that the 50 and 200-day lines are both now rising, and traditionally the run-up to a golden cross is the strongest part in the cycle. Don't look at SDX much, but maybe it'll be back in fashion, let's say. Rising trend channel base there from back in August. Top of the channel there, 5.3 pence, which we're looking for by the end of next month, while we remain above the 50-day line there at 4 pence. Nice break of that resistance line there from June that we had at the end of the week. Tinybuild, also not exactly a high-profile company, but here you can see that we have made good on the island gap reversal. Island bear trap reversal. We meant to gap down there and gapped up after making a new low. So that bear trap island reversal hopefully will lead to a move up towards the November resistance line projection at 9 pence by the end of next month, while we remain above the 50-day line around 4.4 pence. So looking very good in there indeed on that one. Finishing off with Wishbone, and here the stock looking to make an attempt at a rise, trying to have a falling wedge breakout backed by uptrend line in the RSI window. That suggests that above 1.25 pence we could head up towards the 200-day moving average at 1.9 pence, hopefully by the end of next month. That's it from me today. More updates tomorrow.